Before you throw cash into fractional real estate, stop. Not all platforms are created equal, and hidden fees or risky profiles can wipe out your gains fast. In this breakdown of the best fractional real estate investing platforms, we'll compare projected returns, risk factors, and fees so that you know exactly where to invest and what to steer clear of. Now, I gotta be honest, before I even considered putting my own money into any of these fractional ownership real estate platforms, I went deep into the users' reviews, the good, the bad, and the ugly, especially the one-star reviews, because that's where you find the real concerns. For Fundrise, one user complained that while this real estate fractional ownership platform looked professional, he believed that he wouldn't see much of a return unless he kept his money locked up for 50 years. That's a scary thought, right? But here's the thing. Fundrise is built for long-term investing. It's not a platform for quick flips. And when I looked at the bigger picture, with a 4.4 out of 5 star rating from thousands of investors, it seems like an outlier. Many users, like this one, call Fundrise responsible, open, and communicative, completely changing how everyday people can participate in private equity. And here, another user said that the team was transparent, professional, and reliable, saying that they've earned his full trust. So yeah, that doesn't sound like a fractional real estate company trying to lock people in forever and not take out profits. But it sounds more like one that knows what it's offering and it delivers on it. And when I looked into the next one, I looked into EquityMultiple, and one investor said that he put in $95,000 across 7 deals, and that 4 were underperforming, and one lost 100% of its value. And to make things worse, he said that he couldn't reach anyone to talk about it. That's definitely concerning. But here's what I noticed with this fractional real estate investing company. EquityMultiple specializes in commercial real estate, and with that comes higher risk, but also higher potential returns. It's not unusual for a few deals to underperform while others outperform expectations. Plus, I've seen countless reviews that emphasize the professionalism of the EquityMultiple team. One investor who's been with them for 3 years now said that the deal flow and attention to detail were outstanding. He even described the team as knowledgeable, committed, and highly professional. That kind of consistency tells me that while setbacks can happen, they don't define the platform. And for First National Realty Partners, one user decided not to invest because he felt that the offering documents lacked the detailed debt structures and financial assumptions that he needed. So yeah, that could be a fair point for any savvy investor to raise if they wanted it and they couldn't find it there. However, another active investor reported that he signed multiple deals with FNRP and was impressed by the structure, the professionalism, and even having access to a direct account manager who actually picked up the phone. And in my experience, that kind of hands-on service is rare in fractional real estate. So while one person wasn't satisfied with the upfront documents, many others have had consistently positive experiences with transparency and communication. But beyond the user's reviews, the real question here is, what do you actually get with these fractional ownership real estate companies? What comes in the bag? What tools, you know? So this is where they completely diverge, catering to totally different types of investors, I think. Let's start with Fundrise. If I had to sum up Fundrise in one idea, it's democratization. So this fractional investing real estate platform is built for everyone. The barrier to entry is almost non-existent. You can start a standard taxable account with just $10. That's it. Once you're in, you're not just thrown into the deep end. You choose an investment plan, supplemental income, long-term growth, balanced, or even venture capital. This isn't just a slider for risk. It automatically allocates your money across their different funds, which are themselves diversified pools of properties. It's a truly set it and forget it system. Your returns come from two places: quarterly dividends that are paid out in cash or reinvested, and also the appreciation in the value of your shares. One feature I find especially notable here with this fractional commercial real estate company is the Fundrise IPO. So this lets you actually buy shares in Fundrise's own parent company. It's a great way to get on the platform's success itself, which is a fascinating angle. For retirement savers, they also offer both Roth and traditional IRAs with a $1,000 minimum. And practicality is key too. They integrate with TurboTax for easier tax filing, and they have an auto invest feature so that you can consistently build your stake without even thinking about it. Their flagship fund focuses on sunbelt residential and industrial real estate, while their innovation fund dips into private tech companies. It's designed for the investor who wants broad, managed exposure to real assets without the hassle. EquityMultiple employs a distinct strategy, primarily serving accredited investors. So, to even get started, you need to verify your accreditation status, which basically means proving that you meet certain income or net worth requirements. It feels a little intimidating at first, but I realize that it's what keeps the deal quality higher and within SEC standards. The minimum investment also varies, but you're generally looking at $10,000 to $30,000. That's a serious commitment compared to Fundrise, but in return, the deals here tend to be exclusive commercial real estate, debt, and preferred equity opportunities. I tested the process of linking my bank account with this fractional ownership real estate investing company, and it was really smooth and pretty simple from there. And for distributions, equity investments usually start paying out within 60 days, and debt or preferred equity within 45 days. That's pretty quick in the fractional real estate ownership world. For me, EquityMultiple feels like a platform built for people who want to diversify into larger, potentially higher yield projects without the hassle of managing them directly. And then there's the First National Realty Partners. What really impressed me here was their tenant-centric approach. They're really big on acquiring properties anchored by grocery stores and essential retail. Another standout feature is their 1031 exchange option. So, if you're perhaps a seasoned investor, this allows you to roll over capital gains from one property into another, deferring taxes and keeping your money working for you. I also dug into their Dragnet acquisitions model, which is this proprietary system that they use to source billions in real estate deals each year. And it's not just like throwing darts at random properties. You get this structured, strategic way of picking properties that aligns with your long-term stability and growth over time. So to me, that says that they're not just hunting for returns; they're building portfolios with serious staying power. Now, none of these fractional real estate investing platforms is perfect, and I'd be doing you a disservice if I didn't point out the downsides that I did notice. Fundrise, for example, requires a long-term mindset. If you're hoping to cash out fast, you'll probably feel frustrated. But honestly, real estate has never been a quick in and out game either. Fundrise makes that pretty clear from the start. EquityMultiple's barrier to entry is high, so you need like to be accredited. You need to be ready to commit at least five figures. It can be a lot for some people, but in return, you're getting access to institutional level deals that most people never see. And with First National Realty Partners, some deals may feel too narrowly focused on retail properties, but personally, I see that as a strength because grocery anchored real estate has proven pretty resilient when other sectors struggled. And when it comes to cost, all three best investment platforms for fractional real estate are, frankly, well priced for the specific value and market access they provide. The fees are structured differently, encompassing management, acquisition, and sometimes performance fees, and they vary based on the investment type. Be it like a diversified fund or a single asset deal. So keep that in mind. So to get the complete transparent breakdown of each platform's specific fee structure and to see any current promotions they're running, check the links I've provided in the description below. We make sure that those are updated so that you always get the best deal. So here's my bottom line. Each of these fractional real estate investment platforms has its strengths. Fundrise for everyday long-term focused investors, EquityMultiple for accredited high rollers, and FNRP for those who want stability backed by essential businesses. The key is really matching the right platform to your personal goals. So check the link in the description of this video to get started with our special discount and coupon.